2015 was especially volatile for the U.S. cattle markets, and the hope is that this year will be much less turbulent. Here to share some insights on how 2016 is shaping up is Randy Block of Cattle Facts. Randy, as we mentioned, last year was a turbulent year, especially for cattle feeders. What do you see in the year ahead for the cattle feeding segment?
Well, we've actually come out of two of the most volatile years in the history of our business, Kevin. If you go back and you think about 2014, that was the third largest rally in history, and we followed it up with the third largest break in history in 2015. So it has been incredibly turbulent times in here, and it was very, very difficult for producers in all segments of the industry, but cattle feeders in particular really had a tough second half of the year. So we like the way things are setting up now. It looks like we're starting to get back to business in here. We're starting to buy break-evens that look like they're going to provide some profit opportunities for that segment of the industry as we go all through the balance of 2016.
Because didn't you say at the Cattle Facts seminar that we've given back over $5 billion equity in the cattle feeding business?
We right? Sure have. You know, and from the fall of 2013 through 2014, that was the most profitable run in the history of our industry. We made $5.5 billion. Through the end of February, we've now lost $5.6 billion. So typically when you go through an equity drain of that magnitude, you get back pretty well focused on not buying cattle on the come, and nobody can afford to. The equity drain has been so severe.
So let's talk about that. What does it mean to the cow-calf producers, and what do you anticipate in the year ahead relative to calf prices?
Well, I think that's why we've already seen the adjustment we have in calf prices particularly into the fourth quarter of 2015 and early 2016. Calf prices came off these values at $2.50 to $2.80 calves, and as we look at 2016, we'll probably sell a lot of calves in here plus or minus $2. You know, market that'll average in here closer to $2 for the year and range from the upper 70s to the 220 kind of a range. So depending on quality and region, again, still at a profitable level, but not near as good as it was in 14.
We're certainly deep into the bull selling season right now. A lot of folks going to bull sales, and also some folks considering adding some replacement females to their herds. What's your sense of this replacement female market and the growth in the cow herd?
Well, we've had a very aggressive growth in the herd. As we all know, when the rain started in the spring of 2014, we just turned the spigot on, didn't we? Accelerated expansion in the industry. We saw that through the second half of 14 and especially showed up in 15. Well, in 16 now that the herd has started to rebound, we can look down the road the next few years and see that the herd is going to grow another 500,000 to 600,000 each of the next 2 years. So we're going to get back to 31.5 million beef cows, which is where we really belonged had it not been for the magnitude of the drought that drove us all the way back to 29 million. So we're stabilizing. I'd expect that expansion rate to slow down now. We'll still expand because we have profitability and we have green grass. Right. Wonderful grazing conditions in most regions. So I just look for the rate of expansion to slow dramatically.
Yeah, you know, and a lot is dependent upon not just what the U.S. consumer eats, but what foreign consumers eat. And you know, we had a wonderful year in 2014 as exports, and now 2015 comes along and had a little tougher sledding. What's your sense of the overall global market and the global economy, and what that's going to mean to the beef industry?
Well, I think, Kevin, you hit the nail on the head there. I think that's really the big question. If you go back and you really understand what happened in 2015. The reason our domestic protein markets, not just cattle, but cattle, hogs, chickens, all of those markets were under so much pressure was what had happened in the global market. Our exports were off 1.4 billion pounds. Our production was up over 2 billion pounds. And then we imported more product. The net impact of that was a 4.5 billion pound increase in domestic protein supplies. So U.S. consumers had to eat an additional 10 pounds per person in 2015. In 2016, we expect exports will be up 4 to 5% on beef, pork, and poultry. And that will be the key for stabilizing these markets, seeing that global market No, it's not in wonderful shape, but looks like it's stabilized. So that's an important assumption as we look at the markets in 2016-17, because we got to remember we export historically 16 to 17% of all the protein that's produced in the United States.
Yeah. And I understand it is true that we anticipate imports from places like Australia to decrease this year as well.
Absolutely. Yeah. Australian production levels have slowed down dramatically. They've slowed down as a result of rains over there. They'd already harvested a number of their cows, and now the price spreads have been such that we're not setting as an aggressive a price target to bring as much of that protein in.
Well, Randy, thank you so much for coming to the show and sharing some of that insight with us.
My pleasure, Kevin. Thanks for having me. And for all the producers out there, I hope they have a much better year and a less turbulent year in 2016.
Let's hope so. Want to keep up on all the latest news in the cattle industry? Just visit NCBA's website at beefusa.org. And for more expert analysis on the cattle markets, be sure to visit cattlefacts.com.